Okay, so we've looked at how to process purchase returns and sales returns. Well, we better look at now how we actually record that in stock cards. So whenever we have a sales return, stock's coming back to the business. So in this case, it'll be the customer bringing it back to us. So we can see that made stock control go up with a debit, and that must be an in column entry because whenever stock goes up, that goes in the in column of the stock card. Conversely, when we return stock, that's called a purchase return. So we send it back to our supplier. Well, that's going to make stock control go down because we're going to have less stock. So that must go in the out column. So let's look at all the entries that affect stock control and make it go up. We've got the ones we already know, and so in this case, sales returns will go in the in column. And then we've also got purchase returns, which will go in the out column. So it's always important to know with your stock control account which debits would go in which column of the stock card, and the same for your credits as well, which column would they go in. So let's look at the value that we'll use for a purchase return. How should I value them? Because I'm not the one that's determining the credit here, the supplier is. So what I'm not going to do is I'm actually not going to apply FIFO. So the value I'm going to use for all purchase returns is whatever's listed on the supplier's credit note. They're the one that's going to be giving me the credit, so I'll use whatever they decide the amount is. So let's have a look at the stock card here. You can see on the most recent date, we've got 10 at $80 and 8 at $85. So let's just assume now that we're going to return 2 units to the supplier. Well, I guess the question now becomes, which ones do I use? Was it 2 of the $80 ones or 2 of the $85 ones here? Well, for a purchase return, I actually don't need to decide because the supplier's credit note will tell me. So we can see here in the question, the supplier has said you can credit those, or we'll give you a credit of $85 each. So what I'll assume is that when I go and record this in the stock card, I'll do my date, I'll do my credit note number, and I'll have to assume that because I'm getting credited $85, it must be 2 of the $85 units which are going to go back. So they're the ones that have left the business. So if I had 8 and 2 have gone, that'll leave me with 6. And most importantly, I didn't actually touch the $80 units here. I've left that one the same 2 days in a row. So we didn't apply FIFO in this case. What about with the sales return? Well, this gets a little trickier. We're not going to apply FIFO again, but the rule that we use is quite complicated. It depends on the transaction. It can be quite simple, but the rule itself is we're going to value all sales returns at the last stock purchased, which is basically LIFO, so the opposite of FIFO, but only until all returned stock has come back, and then we'll move to the previous price. So what do we mean by that? Well, let's have a look here. So let's go from the very beginning. We can see we started off with 4 units at 30 and 10 at 32. Looks like we had a sale of 6 here and 4 went out at 30, so that got rid of the $30 units. We then had 2 go out at 32, and that's left us with 8 at $32 over here. So that's the story of what's happened. So what happens now if a customer brings 1 unit back? What value do we do? Well, we record it at the value at the last stock purchase. So the last stock in was the $32 unit. So we'll assume that that's the one that's come back. The customer's returned that. So what I'll assume is that the chain of events followed through from here. I had 10 here. I sold 2 of them. That left me with 8. And they were the last ones that I had. So if a customer brings one back, I will assume it's one of the $32 units. And that'll leave me with 9 at $32. Straightforward. What if a customer brings back 2? So we've got the exact same stock card. So let's have a look at this. Customer brings back 2. The rule is value at the last stock purchased, which is LIFO, until they've all been returned, then move back to the previous price. So I'm going to value both of these if a customer returns 2. I'm going to value them both at $32. So what I'm going to assume is that the last ones in were these ones, 32. Okay, the 2 that have come back, well, they're the last ones I had with $32, so I'll assume that they were $32, and that'll leave me with 10 at $32. Again, relatively straightforward, but now we need to deal with a very complicated example. Exact same stock card, but this time a customer brings back 3 units. And here's our problem. I can't value all of these at $32. They are the last stock in $32 units. But the problem here is I've got 8 at the moment. Customer's going to bring back 3. If I valued all of them at $32, that would end up with 11. But I never had 11. So I only ever had 10. So what I better assume is that 2 of them come back at the last price, which is $32. Then what I'll do, it says here, then move back to the previous price. So what I better do is value that third one at $30 like so. So what does that look like? So in our stock card, we'll put the last ones on the bottom, 2 at 32. We'll move back up to the $30 units, and we'll end up with 11, but we can't value all of them at $32. We'll have 10 at 32 and 1 at 30. So we've applied LIFO until they've all been returned, and then that took care of the the 10 units at 32. Then we've moved back up to the previous price, which was $30. That's very complicated, so why don't we look at that as kind of like a diagram. Here's our stock card, here's what just happened. So we started off with a balance of 4 units at 30, 10 at 32, then we had this sale on the 4th where we sold 6 units. So for sales, we always apply FIFO. So we assumed 4 at $30 left, and then the next 2 must have been 2 at $32. So that's applying our FIFO, which we do for sales. Now, on the that left us with 8 at $32. Now, on the 5th of September, a customer returned 3 units. How did we value them? Well, we couldn't value them all at $32, and the reason is I never had 3 more at $32. Yes, I've got 8 left here, but I can't say now that 3 more of those have come back because I never had them. So what I'll do is assume that 2 of them that came back with $32, so that gives me the 10 that I originally had, but I kind of need to stop there because I can't use any more at 32. So what I better do is move back to the next, or the last stock purchase before that, which was this unit here at $30. So I'm going to have to assume that one's come back. So very complicated rule, and hopefully you don't get a question that asks it. It hasn't been on the exam recently, but it could be, and you need to remember that rule. Last in until all stock's been returned.